certainly a company that we talk about every day, Nvidia. You'll walk us through your thoughts here.
Yeah, Nvidia is this company that, it's gone up substantially, but the days of that triple digit return, those are gone. We could forget about that from now. But you can still make some good money here, and it is a quality holding. We're looking probably around 15% in the next 18 months, and that's really on the conservative side. We're going to see some near-term consolidation in the stock. I mean, we've hit some highs, we've gone back down. We had some pullouts. We had some going forward. We're accumulating this stock for one reason, reason alone: the growth in this sector as a whole. That's not changing. We need this type of technology. They are at the forefront right now, and we need to see going forward year over year with a stock like this. We're going to see that double-digit growth consistently unless there's some major calamity in the sector as a whole. We don't see this stock abating anytime soon. Another thing that I would submit to any investors at this point: if you're looking for a newer, high quality company that, well, not so new, but a newer, high quality company, you want to own a company like Nvidia that can be added to your portfolio. Not, don't bet the farm on it, but you're going to get some decent returns, and you should do very well with it. And that's why we're still accumulating at this point. We're not selling at this point. We've had a decent return over the years, and we think it's going to continue at this particular juncture.
And Achilles, before we jump into the chart, I'd love to get your thoughts on this announcement from Qualcomm that it's going to have its own AI competitor chip, essentially, to Nvidia.
Yeah, it's, competition is great. It forces companies to be nimble, to be quick, and a company like Nvidia is going to respond accordingly. But yeah, there's some good news about that. But I think it benefits the sector as a whole. I don't think it detracts from these companies whatsoever. I think there's still we're still in the infancy as far as this is concerned. I think there's still a lot of room for growth here, that's for sure.
Timothy Arcuri, a UBS analyst, stated that Nvidia will start its two-day GPU technology conference on Tuesday in Washington, D.C. Jensen Huang, the CEO, will give the keynote and speak to investors. The event will showcase Nvidia's push into data processing, where CPUs still have a dominant position, according to Arcuri. He went on to say that the company is expanding into new growth-oriented industries with its specialized computing libraries. UBS also talked about Nvidia's problems in China. According to the business, Nvidia's B30 chips are prepared for shipment but require approval from the U.S. government. This decision might limit Nvidia's $50 billion market. Chinese chipmakers can only meet a small percentage of the demand. According to UBS, Nvidia's $5 billion government-backed investment, recent alliance with Intel, and public advocacy could change export restrictions. Nvidia expects that the investor talks and keynote presentation will highlight the company's expansion beyond AI and graphics hardware, particularly in the area of effective data processing. In 2026, investors will keep an eye on Nvidia's product roadmaps and any potential regulatory changes. Nvidia, the chipmaker behind ChatGPT and autonomous driving, has emerged as the indisputable face of Wall Street's artificial intelligence, AI revolution. At the center of the AI gold rush is Nvidia's Silicon, which is well known for its state-of-the-art GPUs and close relationships with IT behemoths. A few days ago, the company's shares reached new all-time highs, continuing their inexorable ascent and making Nvidia the most valuable corporation in the world. Nvidia just picked up another bull this week, adding further flame to the rise. This time, HSBC raised its price target to a street-high $320 and upgraded Nvidia to a buy rating. If this call is fulfilled, Nvidia's market capitalization would approach an incredible $8 trillion. The bank's confidence is based on rising demand for AI, a reduction in trade tensions with China, and a resurgence in chip supply. However, should investors still think about including Nvidia stock in their portfolios at this time, given that its value is already skyrocketing? Or hold off till there's a better way in? Nvidia, a California company based in Santa Clara, barely requires an introduction. It is the catalyst for the entire revolution in artificial intelligence. Previously recognized for supplying power to gaming equipment, Nvidia reversed the trend by launching into artificial intelligence, AI, transforming its GPUs into the brains behind the majority of AI systems in use today. Nvidia's ecosystem became the industry norm when its free software platform, CUDA, subtly locked in a generation of developers. Its software, networking, and CPUs now function as a single, seamless engine designed for speed and power. With a $4.5 trillion market valuation and alliances like OpenAI, Nvidia has a significant impact. It appears like Nvidia has no idea what brakes are. The stock hits the gas every time naysayers claim it is expensive. Nvidia's stock has become the epitome of unstoppable momentum due to the AI explosion. The year got off to a poor start due to geopolitical uncertainty, tariff increases, and export restrictions to China. Jensen Huang, the CEO, even threatened to lose a market worth $50 billion. Sentiment cracked for a second. Then things changed. With a strong rally, Nvidia's stock is currently up 39% year-to-date, YTD, and a whopping 75% in just the last 6 months. On October 10th, the stock reached a new high of 195.62 before declining. Technically speaking, the chart suggests a pause. A cooldown appeared imminent in July when the 14-day Relative Strength Index, RSI, was flirting with 80, displaying the well-known too hot to handle overbought warning. We are currently witnessing precisely that. As of this writing, the RSI has dropped to about 49, indicating that the momentum has slowed as the stock takes a well-earned break. The MACD oscillator, meanwhile, produces conflicting signals. While the downward trending orange line confirms cooling price acceleration, the blue signal line recently passed above the orange MACD line, suggesting that short-term momentum is waning. Bears are silently circling for an opening, but bulls are still in charge and perhaps stopping to gather their breath. At 43.16 times expected earnings, Nvidia's stock may appear expensive compared to its peers, but it is really less expensive than its own historical average. With margins remaining stable and double-digit earnings growth anticipated, the price seems more reasonable than inflated. Even more appealing is its 1.31 times PEG ratio, which suggests that Nvidia's premium may be well-deserved. When Nvidia's fiscal second quarter 2026 earnings report was made public on August 27th, the results were once again outstanding. The semiconductor giant's quarterly revenue of $46.7 billion was up 56% year-over-year, YOY, and its adjusted EPS of $1.05 was a 54% yearly increase that above Wall Street's forecasts. Naturally, the data center industry was the main attraction, bringing in a record $41.1 billion. With Blackwell data center revenue increasing 17% sequentially, it is evident that Nvidia's new Blackwell architecture is doing the heavy lifting. The business began shipping the GB300 in production and gained significant traction with the Blackwell Ultra platform, which revolutionized AI inference performance and produced billions in sales. Not far behind, networking recorded a record $7.3 billion due to the intense demand for InfiniBand and Spectrum-X Ethernet technologies. The release of reserved H20 inventory contributed to the impressive 72.7% gross margins. In spite of export concerns, Nvidia managed to secure over $650 million in H20 sales to a non-Chinese client. Taking into account uncertain H20 sales to China due to export restrictions, management anticipates Q3 revenue of about $54 billion, plus or minus 2%. In the meantime, the non-GAAP gross margin for the third quarter is anticipated to be approximately 73.5%, give or take 50 basis points. A $60 billion share repurchase plan was also revealed by the corporation, demonstrating a strong sense of confidence in its future. Nvidia analysts continue to be optimistic about the company's expansion. EPS is expected to increase by 44% a year to $4.22 in fiscal 2026, and then by 40% to $5.92 in fiscal 2027. While some are still reeling from the most recent surge in Nvidia stock, HSBC is already anticipating the future and is placing a wager that Nvidia will continue to lead the AI revolution. The street high price objective for Nvidia was raised from $200 to $320 after HSBC changed its rating from hold to a confident buy. Nvidia's market value may reach an astounding $8 trillion if that figure is reached. The story is far from over, according to analyst Frank Lee. He claims there is potential for a large increase in fiscal 2027 profitability because the entire addressable market for AI GPUs is growing significantly outside of the hyperscalers. The situation becomes even more promising when you consider the possibility of China's GPU restrictions being loosened in the event of a trade agreement between the United States and China. As a reflection of Taiwan Semiconductor's TSM renewed vigor, the analyst also increased the fiscal 2027 chip-on-wafer-on-substrate capacity estimate from 480,000 to 700,000 wafers. That increase might spur a surge in data center revenue improvements and support the notion that Nvidia's supremacy in AI GPUs goes well beyond conventional cloud investment. With a consensus rating of strong buy, analysts are generally upbeat about Nvidia. 40 of the 47 analysts that follow the stock recommend a strong buy, 2 recommend a moderate buy, 4 recommend a hold, and only 1 recommends a strong sell. With an average analyst price objective of 222, Nvidia has a 19% upside potential. According to HSBC's street high target price of 320, the stock may rise up to 72% from this point. In a note announcing the meeting, UBS analyst Timothy Arcuri stated that Nvidia's next GTC event in Washington, D.C. will highlight recent advancements in artificial intelligence and data processing. Chief Executive Jensen Huang will conduct investor meetings and give the keynote address at the start of the two-day event on Tuesday. Arcuri anticipates that the market for data processing, which is currently dominated by CPUs, will accelerate. The analyst went on to say that since Nvidia is introducing its domain-specific libraries to these businesses, which are all quite sizable, this market may grow in importance. Nvidia's continued difficulties and prospects in China were also emphasized in the note. When and if the Trump administration permits a more potent SKU to ship, Nvidia has B30 prepared for delivery, according to UBS. According to Arcuri, Nvidia had previously calculated that the Chinese AI industry was worth about $50 billion or roughly 2 million units. However, domestic chip makers are only able to supply about $10 billion of that demand. UBS noted that given Nvidia's recent $5 billion investment in Intel after the Trump administration's involvement with the firm, it would appear likely that the company's public lobbying will eventually lead to some new exemptions. Arcuri added that the investor talks and keynote address will probably highlight Nvidia's expanding impact outside of graphics and AI chips, especially in areas related to computing efficiency and data processing. According to the company, investors should keep an eye out for analysis of competitive and regulatory developments that may influence Nvidia's view for 2026. Even though the S&P 500 has reached thousands of all-time highs, long-term investors have continued to see robust returns on average. ETFs that focus on growth and equal weight allow you to diversify while leveraging momentum. For those who consistently invest, buying at peaks has traditionally resulted in significant rewards. Few investors anticipated such a rapid recovery following the severe bear market of 2022, when rising inflation, aggressive rate hikes, and recession fears destroyed trillions of dollars in market value. However, the S&P 500 has been on a strong run since the current bull market started in October 2022, driven by a comeback in technology, strong consumer spending, and a steady recovery in corporate profitability. With mega-cap companies like Nvidia, Microsoft, and Apple setting the standard for the whole market, artificial intelligence AI stocks have been the undisputed leaders. Meanwhile, as investors brace for sustained economic stability, industries including healthcare, energy, and industrials have subtly joined the rally. Many people are now wondering if it is prudent or reckless to buy when the stock market may be topping out, as the S&P 500 is once again teetering on the verge of record highs. History provides a straightforward response that might alter your perspective on purchasing at the top. An all-time high for the S&P 500 is not an indication of an impending bubble or stock market disaster, despite what many people think. In actuality, it is a logical consequence of innovation and economic advancement. According to analysis from RBC Global Asset Management, the S&P 500 index has recorded more than 1,200 all-time highs since its creation almost 70 years ago. It should come as no surprise that the majority of those milestones took place during robust bull markets. This is due to the fact that investors often favor sustained increases in profits, productivity, and innovation. The market will naturally reach new highs as corporate earnings rise, interest rates level off, and inflation slows. It is frequently considerably more expensive to stay on the sidelines out of fear of buying at the peak than it is to tolerate short-term volatility and corrections. These processes are evident from history. The long-term returns of the S&P 500 have remained strong, even when investors purchase at record highs. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Technicals for Nvidia, obviously, we can see the massive growth they've had, but as far as what the technicals are telling us, still room for more growth.
Yeah, I mean, you could look at this one a couple different ways. You could say first, you could draw a trend line that for the most part matches up with these lows. This is often not as exact of a science as some people might prefer. You kind of try to draw the line of best fit going across the lows. That could give you this trend line to follow. You could couple that as well with another line going across these highs, converging toward each other to give you more of a rising wedge type shape here. You could also look at some of these horizontal levels, repeated stopping points here, 164. 175 was a little bit more messy and harder to see, but for the most part, that was often where price kind of settled down, and then 185 was a ceiling here. Our intraday highs, 195.62. That is where the obvious target would be next for the bulls here to take out those levels, and what you would hope would be push into an additional uptrend there. RSI shows that even though we are still above the 50 midline and we are still trending upward, we had a bit of a pullback recently here, a bit of an interruption here. So now as we look potentially toward those old highs, we could see a reset. What you would want if you were bullish would be a crossover above that 70 threshold to signify further trend strength. We can also see our 21-day EMA provides another shorter-term downside boundary right around that 185 level as well. When we look at our volume profile, we can see that the heavy trading area really sticks out very obviously right here around 180, very closely between our two lines that we identified there, 175 and 185. So that would be the holdout point. Notice as well that our linear regression line lines up very closely with that lower edge additionally.
All right, and trading above that right now, about 190. And like Achilles said, competition, he views it as a good thing. The market must agree. Nvidia trading about 2.5% higher this morning on that news that Qualcomm is going to become potentially a competitor.